And for the last time this week, we're going to do 55 minutes of business here in Business Incorporated. This is what we have cooked up for you in the next 55 minutes. In Uganda, they're about to start direct fuel import instead of buying from Kenya. Nigeria and South Africa are collaborating on automotive production. Have you ever worked in charge? They say it is the most stressful place for workers. Good afternoon. Welcome to the program. I'm Ini John Mekwa. As usual, let's start from the global space. Oil prices edged up on Friday on the prospect of OPEC Plus continuing output cuts. But the crude benchmarks were headed for the steepest weekly losses in 3 months on demand uncertainty and easing tensions in the Middle East, reducing supply risks. Brent crude futures for July rose 0.49% to $84.82 a barrel, while WTS the West Texas Intermediate crude for June was up 16 cents. That's about 0.47% to $79.32 a barrel. Still, both benchmarks were on track for weekly losses as investors worried about the prospect of higher for longer interest rates curbing growth in the United States, which is the top global oil consumer, and in other parts of the world. Later on today, the United States Bureau of Labor Statistics will release its monthly non-farm payroll report, which is a measure of the strength of the country's job market and is considered by the Fed when setting interest rates. Higher rates typically weigh on the economy, and that can reduce oil demand. Also, today, Friday, energy services firm Baker Hughes is due to release its weekly count of oil and gas rigs. This is an indicator of future crude output. Still in the global space now, gold prices were poised for a second straight weekly decline, although bullion held steady on Friday as investors remain cautious ahead of the United States non-farm payrolls data that could provide cues on the Federal Reserve's rate cut timeline. Spot gold held its ground at $2,306.84 per ounce, but lost more than 1% this week. Prices have fallen over $120 after hitting a record high of $2,431.29 earlier in April. U.S. gold futures firmed 0.3% at $2,315.70. A renewed push led by Egypt to revive stalled negotiations between Israel and Hamas has raised expectations that a ceasefire agreement could be in sight. Spot gold is biased to break resistance at 2,311 and climb to a range of 2,325 to 2,351, and this is according to technical observations. Spot silver was up 0.1% at $26.73, but was down nearly 2% for the week as silver dips back towards the $25-26 breakout area. We're looking out for a bullish reversal sign. The metal is going to find its feet again around these levels and maybe seeing more gains this year. And from there, let's come to Nigeria and see some of those happenings. Well, Nigeria is exploring areas of its comparative advantage in the manufacture of components of vehicles. The Director General of the National Automotive Design and Development Council, Joseph Osanipi, said this at a meeting of African auto manufacturers, which attracted industry leaders from the continent. He says this drive to develop the auto industry is in collaboration with South Africa.
All of us need to work together. For example, look at a normal vehicle. It has almost 10 types of hoses. How many of these hoses are we producing in Nigeria? So these are the things we are looking at. Let's now work together. which one can we produce in Nigeria? Which one can we even produce and export to South Africa? Let's look at the area we have comparative advantage. Before we get to producing our own vehicle, we can as well be producing major parts of the vehicle. You've seen now about Tunisia. Tunisia said they don't want to produce vehicle, but we are going to major component parts. And the truth is, the component parts employ more, generates more employment, generates more income, generates everything far, far more than the people that just couple the vehicle and put a label and say, we produce this vehicle.
It's a good concept. So,
President of African Association of Automotive Manufacturers has said that he wants to see Nigeria give policies on automotive development the desired attention, which should catalyze the growth of the industry.
the other challenge.
Nigeria is the biggest economy in Africa, and it's got the biggest prospect to grow in terms of GDP and in terms of population. So the preconditions are kind of great for a thriving industry, and so far Nigeria has also driven automotive policy. So the framework for an automotive industry to thrive in Nigeria is now there, and the important thing for us is that the bill is taken into Parliament and that the automotive policy is implemented. And we'll see a strong push from the president, and hopefully he reconfirms that tomorrow, to really implement automotive policy, because with that there is a huge opportunity in terms of market, in terms of mobility need, just in terms of sheer size of the country.
Ideas everywhere there, we hope to see them come to pass. Now, in Lagos State, the state is contributing about 20% to the country's gross domestic product. This is according to the Lagos State Commissioner for Economic Planning and Budget, Mr. Okpe George, who made this comment at the 2024 ministerial briefing held in Alausa, Ikeja. Mr. George says that despite economic challenges in the country, the state has recorded quarterly total revenue size of 433.40 billion as its budget performance, and that the state GDP has grown from 27 to 41 trillion naira.
At the end of the year 2023, the budget performance was 1.538 trillion, representing 87% of the year's budget size. The year 2024 budget aligns with the Things Plus agenda and is crafted to solidify the developmental accomplishments of this administration, with primary focus on the conclusion of ongoing projects such as the Blue and Red Line rail system, some stadiums, the Lekki-Ekpe Road, the new Massey Children Hospital, the Okpebi-Mende Link Bridge. As we speak now, I believe that we're currently, the GDP, Lagos ranks at about the 7th, as we speak now. We contribute, I think, a minimum of over 20% of Nigeria's GDP. You'd find that over the period of review, certainly under Mr. Governor's tenure, you'd find that even the capital has moved, I think, from about 12,000 to 17,000. So, so we're moving in the right direction. I think our GDP has grown from about 27 to 41 trillion. So everything shows that our indices are climbing in the right direction, despite all the shocks and all the problems we've witnessed within the country, the economy in the country, and the world at large.
Now, a dialogue between female entrepreneurs and stakeholders in the micro, small, and medium enterprises sector is to address the challenges and opportunities faced by women in the economic landscape. Through an MSME Stakeholders Engagement Series for women-led enterprises, a platform is provided for women entrepreneurs to be empowered to overcome barriers and scale their businesses sustainably, as well as connect with fellow business owners in the ecosystem.
It's a stakeholder engagement series for women-led MSME enterprises focusing on building financial resilience and leveraging technology. The event is a platform for female entrepreneurs to exchange ideas and gain perspectives on overcoming economic challenges in today's business landscape.
Then we'll have a capacity building program for skills.
The senior special advisor to the president on entrepreneurship, innovation, and digital economy says the goal is to empower women with the tools and knowledge needed to thrive in an ever-changing environment.
All the critical issues that MSMEs face, it's an opportunity for us to have an inclusive engagement where we can sit down and talk about it, and you can be better empowered to propel your business to the next level. And the good thing about strategy is that you can tailor it to your business.
A panel discussion featuring esteemed female entrepreneurs gives room for the ladies to share their experiences and strategies for success.
You have to make your customers emotionally attached to you. You see, we're at a time where social media is saturated. Everybody is jumping on different strategies. Because you think this person is doing it, you go to that direction. You have to be original. You have to know what works for you.
You may be doing something amazing, but you are just not online. Google your name, what comes out? Google, as I'm talking, be doing it. Google your business name, what comes out? Start from there. We are here to make it practical and real. Banky has talked about technology. Technology is so important. You can use technology to be more efficient. You can use technology to sell. Use technology to be more productive. And then, depending on whatever business you do, you have to look for the technology that will help your business.
The gathering also gives the government an opportunity to reaffirm its commitment to supporting MSMEs, particularly those led by women.
As we go into states and listen to the complaints of SMEs and somewhat hear their struggles, we move in with some of the federal government and state government agencies who should ordinarily be responsible for the day-to-day running of those businesses.
The MSME Stakeholders Engagement Series for women-led enterprises not only allows for meaningful connections and collaborations among female entrepreneurs, it also gives room for the ladies to bear their mind on issues affecting their businesses.
Please go back to your seats.
Women's gathering, always pleasant, dancing and singing. Anyways, now let's talk about Nigeria's journey to food security that can be accelerated if the 774 local government areas in the country concentrate on the production of crops in their areas of comparative advantage. The president of Agric and Industrial Entrepreneurs of Nigeria, Mr. Chukwuachukwu, was talking about this earlier today during our program Business Morning.
We're looking at crops that can turn over within a 1 year, 1.5 year gestation period. And the crucial part of what we're doing is that we're looking at creating employers of labor, agripreneurs, these are entrepreneurs who would in turn create employment, So when we look at this economy, these are necessary items that we need both for domestic consumption and also to power the industrial takeoff of the comatose industries. There's a lot of industries there. Now, the secondary nature of what we're doing is that we're going to create raw materials for further processing, creating further employment at the secondary level. This program will take off. It's not dependent on government, but government will buy into it. It's dependent on what the development finance institutions create, and it's fully collateralized. The government just made the pronouncement to put 200 billion into SME. With due respect, that's just money for the boys, as usual. And the people who might be implementing them are just going to be, contracts given mindset, and that never works. The only intervention agency that the government has created thus far is the National Agricultural Development Fund, which I think it will do, if they partner with the private sector that we're trying to partner with them, then we can advance the prospect of creating food security and creating employment at the same time.
Yeah, that was earlier this morning, so we decided to give you, a clip in case you did not watch the program. Welcome back to Watching Business Incorporated right here on Channels Television. We head to the market now with Aniti Edet. Aniti, good afternoon.
Yes, good afternoon, Nini. So the month of May has started, and then of course it's
starting good for the
NGX. It's a bright start, and that's picking up from the last close which we saw the end of April, closing in the green after losing about -6% for that month. And then take a look at your board there, 0.41%, and then it's gradually climbing. Yeah, climbing above the 90.
Our analyst this morning, Mr. Abdulrashid Momo, had said, if we can cross over to 100, then we are heading to a new resistance point. So, we're counting down to that, hopefully.
The 100,000 points. Of course, if you look at last year, let's go back a little bit in recent history, that we were once upon a time celebrating 56, 60, 70, and then we got into the 100. So this has now become the new normal, just like what you said, the resistance. So let's just hope that the market will sustain this, the return to the winning ways. Okay, so now for our viewers, this is the market at intraday. Nigeria's stock market, it gained more than about 303 billion naira at the close of Thursday's trading session, which was, of course, the first trading day after the May Day holiday. And for the market, that is so far 0.55% month to date. But at the close of today's trading session, we will see if that will be an addition or will be a pullback. But so far, for year to date, the market is about 32.08% for Nigeria's stock market. For the Johannesburg Stock Exchange, the JSE index is in the green, as well as the other market that we see for Egypt. The market is very much in the green, 3.34%, while for Kenya Stock Exchange, it made a gain in contrast to what it closed on Tuesday. So for Thursday, it went up by 1.54%, and then that is as at Thursday's trading session. So for that's in a nutshell for the markets at intraday. Now we're also talking about the fixed income market for Nigeria, where we see a bearish trading for the Treasury bills market. The Treasury bills market activities there, it remained bearish. That's because the average yield there expanded at about by 25 basis points to 22.4% for Thursday's close. And then for the FGM bond market, it closed on a bullish note. Average yield there declined by about 2 basis points. There you can see on your board there, we were talking about the bonds market. On the FMDQ, where all these are traded, as at Thursday's trading session, we had a total number of 29 of that debt instrument traded for about 28.6 billion naira. And the highest contributor there, as you can see on your board, is the 22nd of January 2026 paper, with a price of about 19.25 kobo. That's the price high. And then the total value carried out there, 11.6 billion naira. For the Treasury bills market, we talked about the bearish sentiments there. We had the highest concentration on the 25th of April paper 2025, that's for next year, which was a major contributor to a total of 20 deals carried out there for 8.55 billion naira. Now, let's talk more about the intraday, the fixed income market, talking about the review, as well as the intraday analysis and the outlook for what we'll be having for today and for the rest of the month of May. Let's bring in Caleb Alimi, Chief Dealer.
Just before you bring in your guests to the conversation, we have to get to Akwa Ibom State. just a couple of minutes. So to our viewers, our DSTV viewers, we're going to Akwa Ibom State, where there's the commissioning of the Idua Road in Eket. Eket is in Akwa Ibom State, Eket local government area. So you get that. That's for our viewers on DSTV, but for other platforms, that's for the domestic platform and the UK platform. We will continue on Business Incorporated. To stay with us. So Anita, back to you with your guests.
Okay, so now let's bring in Caleb Alimi, Chief Dealer at Providence Bank, for details of the fixed income market, particularly at intraday. But first, starting with the Thursday's trading. Hello, Caleb Alimi.
Hi, Anita. Good afternoon. Thank you for having me.
Okay, so now you're welcome back from the May Day holiday, and then can you give us the details about yesterday? I did that presentation, but you're the dealer there. Tell us more about the starting of the month of May for the fixed income markets.
The month of May, kicked off a bit more interesting than how April ended. April was plagued with a lot of liquidity squeeze. We had the interbank space was largely negative for the most of May. For the most of April. However, towards the end of May, like yesterday and today, we've seen a bit of improvement. That is what has been, accounting for the bearish sentiment you've seen in the treasury bill space, where banks are trying to, create additional liquidity to meet their obligations by selling off treasury bills, and that's why you've seen yields or rates on the treasury bill, continue to inch upwards. Intraday, the sentiments remain the same. Like I said, liquidity has slightly improved. However, it can be better, and that's why we continue to see banks continue to, offer their treasury bills at higher rates so that they can get liquidity to meet obligations as they fall due. On the bond space, it's been largely quiet. Here, you can see that there's been some activity on the short term. That's largely because we also think maybe those are bargain yields. The prices are record lows, and that's why you could see some investors coming at that short end of the curve, 26s, 27s, and thereabouts. But today, we've continued to see activity at that short end of the curve as well. The long end of the curve has been very, very quiet. Recently, the DMO just released the auction calendar for the rest of for May and June, and there's been a bit of modification there. One of the papers that was offered before the February 2034 has been replaced with a new 9-year paper, which will make its debut at this month of May, sometime in 2 weeks' time when the auction holds. So those are the things that the market is basically reacting to at intraday.
Okay, so that's for the debt instrument, but now let's talk a bit about the foreign exchange markets, where on Thursday we saw the Naira making a pullback from a slight gain, which it had. It closed on Thursday, 1,402 Naira 67 copper against the dollar. So now, how is it for the intraday numbers, particularly at NAFEM as well as NAFEX, the autonomous foreign exchange market fixing?
But the Naira has moderately strengthened. There's still demand for the greenback, and the more there's demand for the greenback, we see a bit of weakening on the side of the Naira, right? So there continues to be demand for the greenback, but Naira has, traded around the same levels as it traded yesterday from the NAFEM window. We expect it to end the week this week, because typically, towards the end of the week, on Fridays, we see, fewer activities. But once come Monday, Tuesday, Wednesday, we see a lot more activities at the beginning of the week. But as we, get to the end of the week, activity begins to taper down. We expect that to continue, to happen, for NAFEM, for Naira to close about the same rate as it closed yesterday.
Interesting. So, Caleb, I think we'll leave it there and then have our focus on other markets as the day progresses. So, thank you so much for your analysis.
You're welcome. Thank you.
I was Caleb Alimi, Chief Dealer at Providence Bank, with numbers for the fixed income market. Now let's take a look at the Middle East market, which is our second on the track for markets around the world. Middle Eastern markets, the major regional indexes, they were in the green territory at intraday. We always start first with the United Arab Emirates. Yesterday we saw the Dubai FM in the red, but it's now making some comeback, 0.18% at intraday. But we see some buying spree, particularly for oil stocks across the Middle Eastern region. Abu Dhabi was up 0.10%. Now, on the other side of the market, we see Saudi Arabia a tad 0.05% in the green, while we see Qatari Stock Exchange Index down by more than 1%, just slightly above below 1%. So that's it for that market. Now let's move over to the US market, the world's biggest economy, like we always call it, and is widely known. The Dow Jones Industrial Average, as well as the S&P and the NASDAQ, the futures numbers were pointing towards the green, and that's coming from yesterday's overnight gains, where we saw across the three majors there. Now this is as the investors are looking out for the April unemployment numbers, which will be released by the Labor Office. So now they're expecting that the numbers will be coming out at about more than 240,000, which is less than the numbers printed in the month of March. We had about the US had about 303,000 jobs created in the month of March, but this time is much lower than expected than what we had in that month. So that will be closely watched. And this is coming after U.S. Federal Reserve that held their interest rates steady at the end of its two-day policy meeting on Wednesday. So that's it for the U.S. market. While moving over to Asia, we see the index also, recently they tracked the performance on Wall Street. But for the Nikkei, we see it making a loss. And of course, the Japanese yen is still in focus. It had strengthened to about 153.13 against the US dollar, and this is coming amid suspected government interventions, which was carried out on Monday as well as on Wednesday. But however, the currency is still set for its best week in over a year. For the Kospi, it was in the red 0.26%, while the Hang Seng Index 1.48% rally for the close of Friday's trading session. For the other side of the market, we see the Shanghai Index in the red 0.26%, while the Australia's ASX 200 at about 0.5%, 0.55% for the close of Friday's trading session. So, that's it for the markets.
All right, thank you so much, Anita. We'll see how that opens by Monday. Yeah. All right, just before we head to Berlin now, there's a story just coming in that the Oyo State government and Shell Nigeria Gas have signed an agreement to develop a gas supply and distribution infrastructure that will deliver gas to industrial and commercial users in Oyo State. The SNG will build and operate gas distribution network, which will serve customers across Oyo State for 20 years. Of course, here on Channels Television, we'll give you further details on this in the coming days, even try to get conversations to see how soon we can expect this to work. The signing, the MOU, is supposed to provide gas to Oyo State's residents for 20 years. And you know, this morning at Sunrise Daily Crew, we're talking about CNG, and we're looking for gas for cooking, for our cars and all of that, even though the issue of safety is also cropping up these days. But I mean, this is an encouraging news. We'll certainly follow up on it. You just have to stick with Channels TV to get more details on that and more. So now going back to our usual, now going to Berlin, Germans are unhappy with the European Union's policies and their government. Just weeks to the EU Parliament election. Now that's according to latest Trend poll. And to give us details on this is Chiponda Chimbelu. Hi, Chip. Good afternoon. Why are you guys unhappy?
Thanks for having me. Well, Ini, there are two major reasons why Germans are unhappy. The economy hasn't been doing too well, and in recent years, we've seen high levels of inflation, so that is something that pretty much everyone has been feeling. The cost of living has risen significantly. But that is not the only negative trend. The Germans have also been watching their government coalition, which is made up of three parties, struggle to come up with answers to the country's ongoing challenges. Now, that's because they often disagree over how to solve them. And the current disagreement is over the 2025 budget, which has to be drafted and submitted to the Bundestag, the German parliament, for a decision. The Social Democrats, the Greens, and the Free Democrats cannot agree over government spending. Now, the Social Democrats and the Greens want to lift the debt brake to be able to increase public spending, but the Free Democrats don't want to do that. Now, this squabble and others may also affect how the parties in the ruling coalition perform in the EU Parliament elections next month. Most Germans are also somewhat dissatisfied with EU policies.
Okay, so now what can we expect from the EU policies? Has it gone down well with the people? Is it considering these parts?
With policies from the EU, most of them say that immigration is the main problem that the bloc faces, and they would like to see Brussels make agreements with countries like Egypt, Lebanon, and Tunisia to prevent people from crossing over to Europe. Now, Germans are also concerned about the environment and climate protection and the lack of competitiveness of the EU economy. The bloc has been struggling to cope with the fallout from Russia's full-scale invasion of Ukraine. The OECD expects the bloc to grow modestly this year and the next. It is expected to grow 0.7% in 2024 and 1% in 2025. Now, the ongoing economic trends and what some consider increased red tape from Brussels has led to more dissatisfaction with the EU.
All right, Chip, let's head to the market now and see how that's doing in intraday.
European markets are expected to trade higher today, Inni. They could be taking cues from Asian stocks, which surged to their highest level in 15 months. Now, later today, investors will be looking for more indications of the U.S. Central Bank's future monetary policy. The U.S. labor market report is due on Friday, and analysts expect job creation to have slowed in April from March. And if today's data, that is April non-farm payroll figures, confirm their expectations, it could mean that the U.S. Fed's attempts to curb inflation and cool down the hot labor market with high interest rates are working. And on Wednesday, we did hear U.S. Fed Chair Jerome Powell express uncertainty over progress to rein in inflation.
All right, Chair, thank you so much. Everyone is looking to the United States. Thank you. All right, now we head to Africa, where according to the 2023 Gallup State of the Global Workplace Report, Ghana has been ranked as the 4th most stress-inducing country for workers in sub-Saharan Africa. I hear you say, thank God it's not Nigeria. Well, the survey highlights that Ghanaian workers grapple with stress on a daily basis, catapulting the nation to a prominent position among stress-ridden work environment in the region. Topping the list is Chad, where workers endure the highest levels of daily stress, followed by Uganda, Tanzania, and Sierra Leone. Ghana closely follows Sierra Leone as the 4th most stress-laden country for workers. Across sub-Saharan Africa, 46% of workers face daily stress, with nearly equal representation among male and female workers. In Egypt, the country has decided to apply the capital gains tax on shares and stakes listed in the Egyptian Stock Exchange, starting from the tax season of the March-April 2025 through the Egyptian Clearing Company for 2024. Capital gains tax is a tax imposed on profit realized from certain asset sale for disposable, including securities traded in the stock exchange. Now, the specific capital gains tax rate and the regulations in the country can vary between countries. The decision was announced following a meeting held by Prime Minister Mustafa Moboli at the government headquarters in the new administrative capital to discuss ways to develop the stock market. Cabinet spokesperson Mohammed El Homosani explained that the decision came against the backdrop of the non-issuance of executive regulations of law number 30 of 2023 that governs the income tax that has been released as of now. Well, the absence of the procedures necessary for circulating and collecting the tax and the need for further clarification on these procedures through the Egyptian Clearing Company is still being awaited. In Uganda, the country will start importing fuel directly from next month in a deal with Vito Bahrain, which the country hopes will supply cheap petroleum products. Energy and Mineral Resources Minister Ruth Mankambira told oil marketers in a circular that Uganda National Oil Company's maiden cargo of super petrol and diesel would arrive between June 18th and 26th. Uganda has negotiated prices with Vito Bahrain in the hope of lowering palm prices below the current rate that are largely determined by a deal that Kenya signed with 3 Gulf oil majors. The start of UNOC's direct fuel import marks an end to decades of relying on Kenya for the critical commodity, either through the open tender system or the current government-backed deal. Uganda has in the past few months decried costly fuel, accusing Kenya of negotiating high prices in the deal with Saudi Aramco, Emirates National Oil Company, and others. Well, we're going to end, the African stories coming back to Nigeria. We're looking at some basic items. I know we've talked a lot about inflation, but when we look at what's going on with the prices, I want to drill down on it. SBM Intelligence did take some time to look at that. So you see there on the board, some of those items you cannot do without, I believe. I mean, who can do without rice or bread in a week, in a day, you know? But let's talk to those who carried out this research. SBM Intelligence, the head of research joined us, Ikemesit Effiong. We had to drag him, hi Ikemesit, we had to drag him out of a meeting he was attending to come and discuss this. So everybody knows there's inflation.
Indeed.
But it's not just Nigeria.
Absolutely.
But anyways, so let's see your findings. So we see that foreign rice. For what period did you do your findings for?
From the beginning of the first quarter of last year, 2023, to the end of the first quarter of this year.
Okay, so first quarter of 2023. So this is year on year.
This is year on year.
No, you shouldn't have done that. That's going to be scary. That's why we have such...
It's just a year.
It's just... But I mean, have prices tapered? We see that the bag of rice has reduced a bit, at least, I think for about a month now. I know with the depreciation in the balancing of the value of the naira, I don't know if, it's come back again. So this is from first quarter of 2023 to the first quarter of 2024.
Indeed.
We saw foreign rice. This is obviously the Forex impact if it's foreign rice.
Oh yes, that's definitely Forex. I mean, you also see that manifest a bit with, tin, tomatoes and pasta, right? Because they are key inputs into these products, right? Which are imported, of course. And you're absolutely right. Inflation is somewhat moderating. Our outlook is that, there would be some growth, but it would be at a slower pace. But these are some scary numbers.
Yes, it is. I mean, how can we have... You're heading to 100% here. No wonder food inflation is above 40%. Now, I wonder what it will be for April. Because April, we also had some shockers coming our way. Tariff, the Naira, of course, was there. So I just wonder if you look at even month on month, from March to April, I'm sure we'll have some shocking numbers also.
Yeah, there will definitely be some interesting numbers, right? I mean, even in prices of non-basic items, for example, some of the streaming platforms, right, they've adjusted their, the plans for some of their subscriptions, right? So, with respect
we're still fighting against that.
I mean, so with respect to basic items, but also with some of the other non-essentials, right? You're still seeing there's still a healthy inflationary clip, right, that is being manifesting in some of those market segments. Right, but again, this is mostly the Naira. This is obviously also some of the more structural issues around infrastructure, around fiscal policy, not necessarily pulling its weight as much as monetary policy has done a lot of the heavy lifting. Fiscal policy has been lagging somewhat, and you're seeing that I mean,
look at petrol, 160,
yes.
And I think it's more than this now because in Lagos, for instance, in the last couple of days, people have been buying. I know a colleague who bought petrol for 750 naira
precisely
for a liter. So I hope it's very temporal, please.
Yeah. We absolutely hope so too. But also interestingly, this is a non-scarcity increase. So the point is, even with the availability of petrol, yes, even with the availability of petrol products, that's a significant number. Obviously, the fact that the subsidy was announced as removed and the deregulation that we're seeing in the market.
Used to it by now. But when we talk about transport, commercial, public transport, I think a lot of it is self-inflicted because in the evenings when you see people coming back from work, there's a rush and all of that, especially at a time like this when the filling stations have long queues. It's like the transport operators purposely increase prices just to make the most, and they're inflicting a lot of damage on Nigerians.
Well, I don't know if that behavior alone will account for a more than 70% rise in it. What's quite interesting for me with respect to public transport, right, is when you juxtapose that with petrol, which is a major input into that, this should probably be a slightly scarier number considering, right, the rise in petrol prices, right? So, obviously, I know there are some states, Lagos included, that said they will subsidize aspects of public transport. The Blue Line, the fares are still subsidized now. So all of that obviously has meant that inflationary growth there has somewhat tapered off or moderated, right?
The CNG buses were probably CNG buses, and I know last time I went to Ogun State, I did see some buses that were tagged CNG. Has it contributed to the fact that we don't have up to this level of increase?
Well, I mean, the CMG buses are still coming, online, right? That pipeline is still growing, right? So they are not a significant segment. Well, hopefully, right? Yeah, so they are not a significant part of the transport mix yet.
So they don't have an input.
So they don't have a significant.
But we do have like the Red Line, the Blue Line of Lagos State, and also the subsidy that the Lagos State government, I think some other states also joined to give a bit of subsidy on transport, even though it was for a period of time.
Precisely, right. And that's why you've seen that not be as scary, right, as petrol. You're absolutely correct.
Now, another interesting one is the entertainment for me.
My favorite.
Entertainment. We're fighting it, but I mean, it's obvious. Now we have the telecommunications guys also saying that they need to hike. I know that's not part of entertainment.
I mean, no, that's the telecoms part. It's not part of entertainment. That's telecoms, right? But what you've actually seen, and this is interesting, especially when you square it with, the multi-choice story, what the FCCPC is trying to do, right, with multi-choice. Those prices have already been increasing. As a matter of fact,
they increased even before this fight were having.
It was supposed to
start on the 1st of May.
Yeah, precisely, right. But some providers have increased. Start times, I'm looking at you. Some providers have increased twice during our coverage period, right? Once in Q3 of last year and then in January, right, of this year, right. This is actually moderated by the fact that the adjustment in prices for DSTV bouquets, right, has been much less. It's lagged all of its other cable TV competitors, right. That's why this increase, right, is it's in the high tens as against probably the high 20s or the high 30s.
So when they increase without informing consumers, isn't that trampling on the consumers' rights?
I mean, the interesting thing about multi-choice right now is that the bouquet prices in Nigeria lag, right, those of DSTV, bouquets, right, in Kenya and in South Africa,
even
right?
In South Africa.
Yeah, exactly. And by a significant, right, amount, right? So when you square that with where we're at right now, and the fact that in multi-choice case, they even offered, some notice, right, to that expect, they've sort of tried to manage the consumer expectation around increased prices within that same period. The prices, most beer prices have increased, right? Have been increased 3 times, right? The prices of essentials, we've seen petrol, you're seeing noodles, we've seen pasta, you've seen bread, right? Have significantly increased. The question then becomes for a non-essential commodity such as entertainment, which, to be very honest, if you watch Channels TV, you're fine. You can skip on your Netflix, you can skip on your DSTV. Why is that the political hot potato is the question.
So are you saying, because we had this argument in the office, are you saying, well, it's not a necessity, it's by choice. Let them do what they want to do. You choose. I mean, if you want to live a luxurious life, you pay for it, or else you just watch the local stations.
You're not going to put me on trouble, right, on international television. I would just say, you've answered your question. You've answered your question. But the interesting thing, I neglected to highlight it. The interesting thing is the prices for the cheapest bouquets, right? Whether it's DSTV or Star Times, those have barely moved, right? So there's a lot of market segmentation with respect to entertainment, which offers some form of consumer freedom in terms of choice. So you could downgrade, right? You don't have to completely skimp on it.
You don't have to, like we say, you pay for it if you want a luxury life. Now Absolutely. For this, I think the health conscious individuals will be good for them. I mean, you want to take beer, it's not very healthy. You want sugar, we're looking for sugar tax anyway. So this is going to reduce the health risk that some Nigerians will face.
Well, I mean, there is the health part of the conversation, but you also know some of the biggest, listed entities in the country are in these market segments, right? And they are seeing
taxes are being threatened. So, and the breweries did say they're going to close. Nigerian breweries will close 2 of their plants.
Precisely.
That's minus some taxes.
Yeah, that's minus some taxes. I actually found interesting, right? And the Nigerian brewery CEO discussing on his earnings call, saying that Goldberg, which is their lowest priced, it's sort of of their low premium market proposition, right? Ordinarily in higher inflationary times, people skip on things like Star and they go to things like Goldberg. People are skipping on Goldberg.
Are they going to the premium?
Well, the question is people who have downgraded from more premium categories, right, to things like Goldberg may probably not be drinking as much as they would. So it might be an everyday after work or 3-4 days a week downgraded to maybe just the weekends right now. And that's putting pressure, obviously, on their revenue top line.
And I was thinking people drink away their sorrows.
Yeah, but if it's expensive to drink away your sorrows, you might as well just cry it away or something. That's probably...
All right, Kenneth, thank you so much for taking time out from your meeting to join us.
Absolutely.
Really
pleasure.
do appreciate it. Enjoy the rest of your day.
Pleasure.
All right, now, so... Well, I thought people would be heading there, to take care of their sorrows. But it's a good thing that you're not doing that if you were doing it before for the health reasons. Let's head to the crypto space now and see what's going on there. See the headlines. Okay, no, they said I should do the crypto numbers first. So we see that Bitcoin has dropped to less than 60,000. Did you think it would come so soon? Where we're expecting the $100,000 for one Bitcoin, and now we're seeing it even drop further. I'm sure some people are watching for the lowest level to see if I can just get in. So by the time it starts growing again. So, and this is after there's been almost 2.8% increase in the last couple of hours. I saw this number for morning. So I think yesterday it went lower than this, maybe in the middle of the night. So 2.86% increase on the price of Bitcoin. And then it's closed or did not close. As at the time we took the numbers, 59,493. Ethereum. Ethereum is supposed to be about 3,000 or 4,000, but see it at 2,985 after it gained 1.26. Solana is positive. XRP, I think we have some stories about XRP, and then Cardano is in the red, ICP, but it's a mixture of colors on the board. But this is obviously, we've seen better numbers than this. I'm looking at the headlines now. That XRP story, it hit a new milestone of 5.2 million active wallets for XRP. So we saw the positive there. So some positive sentiment around it. Also, we'll be looking at post-ETF market trends. It's not just about the halving. And also, JP Morgan is advising cautious approach at this time as we see some movement, not so good movements on Bitcoin and some others. So post ETF market trends and all of that. So to discuss some of this with us is Onua. I think I'll call him my Friday customer. Onua, good afternoon. Thank you for your time.
Yeah, thank you.
All right, so let's talk about the XRP achieving a new milestone at a time when we see that the market doesn't have very encouraging price trend at this time. Do we know why it seems XRP is receiving some attention?
Yeah, currently the market is consolidating and retracing after a certain approval of the ETF that was done in US and Hong Kong. So we see markets are trying to go back to its previous low, trying to consolidate before it gets a new high. So people are looking at other altcoins, and there have been a watch on SRP because right from time SRP, owned by this company called Ripples, has been in the spotlight. People have actually been looking at it. So, but recently it started getting attractions, and within the last 24 hours, it had about $1.something billion transactions in terms of volumes. So that has actually spiked the number of wallets that has been created, and those that actually had it before have actually upgraded to that effect.
Yeah, and then the post-ETF market trends. What's the trend?
ETF market trend is it has been a double-sided way. The ETF actually has given more investors opportunity to come into the market space of crypto. So, but at the same time, too, the ETF too has given a lot of newcomers an opportunity to have more confidence in the market. So that's why you see the market currently now is doing a form of retracement, preparing new comers to come into the market.
And then JP Morgan is asking that, let's be cautious, because naturally, since we see the price of Bitcoin, for instance, dropping, Ethereum is less than 3,000, Bitcoin has lost the 60,000 level. This could have been a good time for investors to hop into the market and waiting for a bull run. But why is JP Morgan asking for caution?
Yeah, it is expected by JP Morgan to bring out that statement. It's true. There are a lot of we have so many newcomers actually that don't know how the system works and how the bull run actually is expected to take off. Normally, a bull run normally takes a couple of months before, and we will see some certain sentiment to be able to push the market to the upside. So, but currently now, a lot of expectation is more than what the market is actually showcasing on the price action. So that's why there's everybody has to use some form of caution. The market cannot move, but you can't force the market. The market cannot move by the way you want it to move, like just because after the halving or after the, so you should just expect the market to just move. So we expect them to exercise patience. Market is patient, so that by the time it's time, the market will move exponentially up.
Yeah, but we have individuals like Elon Musk that can move the market. What do you think can move the market at this time? We're waiting for job creator.
When it comes to Elon Musk moving the market, it's very strategic. He does it in such a way that he doesn't want to just make any move that can spike the market. He has a way of doing it. Currently now, every token and every coin is on the sideways movement. So, but by the time it moves, Bitcoin is just the brain behind all the coin. So when Bitcoin moves down and breaks a new high, normally we're expecting Bitcoin. It dropped exponentially, very very low recently. So we're expecting to move in about breaking the last resistance to an uptrend for other coins to actually follow suit. So that's why we have to be a little bit careful and wait for the market to move.
So would you say that this is a resistance level, or do you see a continuous drop at least over this weekend?
Yes, there will be a little drop. But the drop is still falls down under the what we call retracement. Retracement means that currently Bitcoin and other altcoins within the same project are currently bullish. I repeat, currently bullish. So very irrespective of what we are seeing at the market right now, it means that we are still bullish until it breaks the last low of the last price that Bitcoin was before it actually came up to this high. So whatever we're seeing right now in a monthly time frame level, the Bitcoin is actually on a bullish trend. What you're seeing currently is a retracement from the market. So also with other altcoins that follow suit. So as long as the market has not gone below what we expect that will make the market to reverse. There's a difference between the market reversing and the market retracing. Retracing means that the market will retrace, will come down a bit and more downward trend for a while before continuation of the uptrend. But a total reversal is market breaking the last very low of the market and for us to give us a possible reversal and the market heading towards downside. But for now, market is bullish. We just need to some exercise patience and we'll see the trend going to up there. Bitcoin will actually hit the high of over 100,000 as we speak before the end of the year, irrespective of what the market does. Because in the market, sometimes you say this market, a lot of panic buying and panic selling. You want to sell that token, and after some time, you now see market going to the same direction that you have earlier envisaged. So currently now, there has to be patience in the market.
All right, Noah. So I know for some viewers, the only thing that we hear is Bitcoin will hit 100,000 before the end of the year. And if it doesn't, we know your address. We will get you.
Yes.
Well, thank you so much for sharing your perspective on the program. All right, so that's it on the program. Just before we go, I'd like to remind you again about that news about the Oyo State government and Shell Nigeria Gas signing to develop gas supply and distribution infrastructure. The agreement is supposed to cover 20 years to provide gas for residents of Oyo State. Details in all the broadcasts here on Channels Television. So we say thank you so much for being a part of Business Morning and now Business Incorporated. Still remaining 1 mile. See you at 10 p.m. for Stock Market Report. But, have a great weekend. I'm Ini John Mekwa.